This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, December 29th. Starting out with the stock index futures, we are seeing prices higher, in fact, quite a bit higher this morning. Some of the strength linked to higher commodity prices, which supported the natural resource companies, which in turn then supporting the indices. Also, we did see some follow-through strength with the consumer confidence report coming in better than expected this morning. It came in at 96.5. The guess was 93.5. So follow-through gains there with that report. Still thinking that into next year we will see higher prices, and we also believe that at some point next year we will see new historical highs for all of the major indices, including the S&P, the Dow, the NASDAQ, and the Russell. Now, moving over to the currencies, not very much news in the overnight trade that would affect currencies. Of course, we did have the consumer confidence report here in the U.S., and that is dollar supportive. So the dollar is a little bit better. Also, we are seeing higher prices for the commodity currencies, the Australian dollar and the Canadian dollar, with crude oil trading almost $1 higher right now. Now, moving over to the interest rate futures markets, we are seeing lower prices at the long end of the curve. The 30-year bonds are over a point lower now. A lot of this is linked to higher equity prices globally in the overnight trade and also higher commodity prices. Of course, higher commodity prices is an inflationary influence which would tend to affect the long end of the curve more than the front end. So that is the main reason why 30-year bonds are under some pressure. Also, the consumer confidence report, as we said, coming in stronger. That also a bit of a negative for the long end. So we do feel that with what we're seeing with global core inflation rates starting to move higher over the last couple of months, and that is likely to continue into next year, that will be the negative, we believe, that adversely affects the long end of the curve, namely the 30-year Treasury bonds. So we are bearish for the 30-year bonds short term and also into next year as well. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.